What's going on, guys? It's Tremaine here, the most disciplined day trader on YouTube. Something a little different today. This is actually the London session on NASDAQ. Looking for lower prices, targeting daily premium wick high. I believe that is Thursday's wick on the daily chart, the high of that. That's my draw liquidity. Live account, real money, real funds, all that good stuff. Now, we've worked that new day opening gap, okay, our current new day opening gap. The bodies, you can see us staying in the lower half of it before finally getting some nice displacement lower. So shorting two contracts at the low end of the breaker. We have a high, low, higher high. I'm going to annotate that later in the trade as it progresses. And my stop loss is above that up close candle prior to the strong displacement lower. Trading that as a bearish order block. I'm allowing for price to trade up into that. But if we were to take out that high, then I would no longer be interested in lower prices. So that's why my stop is there. And all I'm watching to see is, can the bodies respect this breaker? Okay, the wicks are doing the damage, trading outside of it. And again, I'm allowing it to trade into that bearish order block, but I don't want to see any bodies closing outside of the breaker, which is that lowest down close candle in between those two highs. All right, so I'm just watching. Where do we close? The wicks do the damage. That's fine. What matters to me is where do the candles close? Okay, so now we're back to the low end of the breaker. I like that. And that bullish fair value gap that formed as price was trading up into the breaker, that fair value gap, that BISI, I want to see that fail. Okay, I want to see that be used as an inversion fair value gap. Obviously, if we're in a sell program and if I believe that lower prices are on the menu, I wouldn't want that fair value gap to take us into a higher high. Okay, I want us to just bulldoze right through that, use it as a premium array, remain in the lower half, all that good stuff. So those are all things I'm internalizing and forecasting in my mind prior to even trading to that fair value gap. And I'm aiming for about $2,000. You can see the risk to reward there is pretty handsome. I'm not sure if you can hear it in my voice, but I am a little tired. London for me is around 2 a.m. So right now it's on TradingView time, New York time, it's around 2:45. It's really 1:45 a.m. here in Houston. But I took a nice nap during the day, so I had some energy, and I wanted to practice some things using real money. And it's Friday, so I have the weekend to rest, right? I don't think anybody's too tired to make a couple $1,000. All right, so we're leaving that breaker. Smart money was able to peel off their longs that were underwater and accumulate new shorts. Discord members, we covered that extensively at the end of our live stream. So you already know what we're looking at there. I'm adding one more to my short at the low end of that inversion fair value gap, trailing my stop loss above that high. If it's good, it shouldn't take out that high. We've already worked the breaker and the high end of it. All right, we have a little civvy there. And I'm allowing price to trade into that bearish order block. That last beefy up close candle, that's 2 candles away from my first entry. I'm allowing price to trade into that. And look at my broker doing some foolishness, logging me out. I was in the bedroom and the Wi-Fi isn't the best, so it's glitching a little bit. So now the thought process here is I want to see us get back beneath the inversion fair value gap and remain in the lower half of it. Okay, if we're bearish, if it's good in a perfect low resistance environment, you would want premium arrays to be respected as far as the lower half. Don't want to see the upper half traded to. So beautiful feedback there. And I'm running a negative half standard deviation. You can see what I'm anchoring it to, but that high of the swing all the way down to the low, I'm measuring that and projecting it lower. And that negative half standard deviation, I'm going to take a partial there. It's an easy bread and butter, low hanging objective. That way I won't require that daily wick high to be met in order to be profitable. And I'm actually changing it, going to take off 2 there. So under that short-term low, I want to see speed underneath that. I don't want us to just run that sell side and reprice back into the range or back to the inversion fair value gap or the breaker. Once we take out that low, it needs to be aggressive, needs to be quick. And if you notice to the right of that low, I have annotated we have relative equal lows, okay, just beneath the inversion fair value gap. Those lows are too clean. The market rarely likes to bottom out like that. So I'm just seeing that as engineering sell side. And now watch this inversion fair value gap. Okay, we're trading in the lower half. All my focus is in that lower half. I'm telling myself I don't want to see anybody's closing past midpoint of that inversion fair value gap. If it's good, it should have no willingness to trade to upper half. That's bearish order flow. That's low resistance. Signatures, that's what we want to see. And then right there, that's the relative equal lows taken out. Now I want to see us expand through that. Kind of like a hot knife through butter. Trailing my stop to above mean threshold of the breaker. Okay, so very specific stop loss trailing. It's not just random. Not worried about removing the risk too early. I want NASDAQ to prove to me that it's done using the inversion fair value gap in the breaker. And then when it proves to me that it's done, then I'll remove the risk. So right there, we have two fair value gaps. And how can I trust moving my stop loss to break even? Well, for one, my stop is above the high of the inversion fair value gap. We already have an understanding that if it's bearish, it should not trade to the upper half of that, let alone the high. So my stop loss is safe where it's at. And we have two fair value gaps stacked on top of each other. The general rule of thumb, whenever we have two fair value gaps, in this case we have two SIBIs, we have two inefficiencies stacked on top of each other like that, and you see me labeling it there. That upper one should be treated as a breakaway gap. So right there, as we trade into it, I'm expecting immediate feedback because ideally I would want that to stay open. So you see me label it as a breakaway gap before it even traded into it. I want the bodies to stay in the lower half, or excuse me, I want the bodies to stay in that lower SIBI. Okay, it could wick up into that breakaway gap, that's fine, but ideally it should stay open. And if it doesn't, if it wicks into it, I need immediate feedback outside of that. It needs to break away, it needs to leave. It should not be marking time in that breakaway gap. And you see that there, trades into it just with the wick, nobody's closing inside of it, and you get that immediate feedback. So that's nice. Love to see that. In London session, and the waves respecting the PD rays was just beautiful this morning. The high of the breaker, you see the bodies respecting it there. We get beneath the inversion fair value gap, respecting the lower half. The breakaway gap, immediate feedback off of that. This is just a beautiful display of the PD rays doing their thing. Locking in, $200. Stop loss trailed at the low of the inversion fair value gap. At this point in time, I don't see any need for price to trade back to that inversion fair value gap. So making sure I lock in a little something should NASDAQ want to reverse on me. Make sure I get paid for my time, a couple $100. That negative half standard deviation partial is in the crosshairs. One contract filled, one more, there we go. All right, so go ahead and edit these limit orders. The bulk of my position is peeled off. There we go, one contract remaining. Gonna lock in how much here? I'm measuring about $135. Looking to see if I can make an extra $800. And of course, use Apex code CTRADES at checkout. Just received my 5th payout from them, so that's exciting. Should hopefully get payout number 6 from Apex next week. Just gotta do the 8-day minimum requirement. All right, so NASDAQ, that daily premium wick high, I believe that's Thursday high. Let me fact check that to make sure I'm not saying the wrong thing. Let's see. I think that is Tuesday's high, if I'm not mistaken. That high comes in at 647. Okay, so yes, that my final TP is actually Tuesday's daily high. That's what I'm reaching for as my terminus. So here I'm annotating that buy side that forms the breaker. There's that liquidity pool. We move away, come back, run out the buy side, and then that's your breaker formation. All right, so NASDAQ retracing against me a little bit. Beautiful, beautiful exit, almost capturing the low using that standard deviation. So if it comes from my stop, I did not require it to reach my best case scenario target to make good profit on this trade. And it's almost at my stop, so there we go. And you're going to see all of the fills here, the low of the breaker, selling 2, selling 1 at the low of the inversion fair value gap, taking 2 off at the negative 0.5 standard deviation. Beautiful exit there, including a couple ticks for the spread, and my last contract getting stopped out in profit there. Denied my exit. The channel is growing, and I'm getting a lot more doubters and stuff, so you see the executions are real. And now here I'm showing what I was reaching for. I forgot I included this. But the high of that wick on Tuesday, that's what I'm looking at. And then if NASDAQ got real animated and if I had more contracts on, I would aim for the upper quadrant as a potential draw. So running my fib, slap on the quadrants, there you go. That's what I was aiming for. NASDAQ just failed to reach it. All right, and you can see the business right there, real funds, live account, connected green dot, all that good stuff. There you see the P&L, $1,500 for the session, and that was my last trade for the week. So hopefully you found this one insightful. Beautiful, beautiful delivery during London. I am done for the week. And Discord members, we're back live trading Monday morning at 9:15. Love y'all, man. Peace.